Hello, this is Cryptolyze. I hope you are doing well on this Thursday, 24 August 2023. It is with pleasure that I meet you today to talk about STX, Stacks Crypto. Stacks, which is a blockchain really specialized in smart contracts, and it's on Bitcoin because it's a layer 2 of Bitcoin. So as usual, we will dissect this analysis in two parts. Fundamental, we will really go back to what Stacks is, how it works, what the news is, and then we will attack the technical part to project ourselves in the short, medium, long term on purchase prices, selling prices, and that start right away. So what is Stacks? Stacks is a blockchain that is grafted on Bitcoin. So normally it is a layer 2 that offers smart contracts on Bitcoin. We know very well that BTC is not necessarily the most configurable, the most programmable blockchain. That's why Ethereum has so many advantages over BTC on this side in any case. But on the other hand, it is the blockchain that is the most decentralized, which is certainly one of the most resilient, if not the most resilient. And we've always had layers 2 that are grafted on top of which we'll have projects like RGB or Lightning, for example, in which we'll meet a particular need. The need that this text meets is really going to be the notion of smart contract and the notion of programmability through BTC. To get there, it's going to be quite simple. They're going to scratch on each other. In fact, they're going to have their own layer, and then the transactions are going to be instantiated on Bitcoin. We're going to go look at that together. It must be understood that Stacks really wants to leverage Bitcoin. To do this, they have a methodology that is really particular. Their goal is really to instantiate decentralized finance on Bitcoin, to be able to make NFTs other than classic ordinals that you can usually see on Bitcoin and really have BRC20 without it really being BRC20. And that's what's going to be really interesting. To do this, they invented the proof of transfer. What you have to understand is that the complexity that we will have to instantiate on BTC is that we have to be sure that these blocks, in any case, the transactions, are noted in the blocks. So for that, at some point you have to mine, because you could very well have a number of miners who will refuse transactions from Stacks. So we have to ensure that part. And for that, suddenly we will set up a cycle called the proof of transfer, in which we will have miners who will precisely create blocks and recover BTCs, which will transfer to Stacks. Therefore, directly those who hold STX. So the Stacks crypto, and then these rewards will be transferred to miners in the form of STX with transaction fees. So this system is really innovative in the sense that we will have the implementation of a junction between the Stacks layer and Bitcoin through the Bitcoin miners. And that's the very principle. That is to say that we're going to come back to this quickly, but we're going to have what are called mini blocks. So all the little lines that we see here are the linked blocks in Stacks, because we have a validation consensus at the Stacks level, which is done by the stackers precisely of Stacks. And systematically, as soon as there is a BTC block, we will reinstantiate some of the transactions, or even all of the transactions in the block, and BTC, and we will in fact go up like that little by little. We instantiate all the transactions that we compress to put them in the blocks of BTC, and therefore we will have the scalability of Stacks, and precisely through the layer that is carried out. On this, they defend themselves quite a bit, because they also explain throughout their documentation, which is very well done, why they are not a sidechain and why they had this desire to set up the proof of transfer, have their own miner to be able to do it, in which the miner itself will have STX and will have transaction fees, why it is more interesting than mining BTC. Well, here we really have an approach to instantiate a programmable layer, ABTC, so we still have limitations in the sense that we find ourselves on Stacks, which will have its own programming language and sometimes difficulties in being able to instance decentralized applications, but which is at the same time logical because we are not in something and an environment which is basically designed for that. And we arrive in a layer of attitude which is relatively strong, and it is at the same time the strength of Stacks next to that. So we have STX, Stacks' crypto, in which we are in a 67% dilution. We are in a diluted market cap, which is already almost 800 million, which is relatively strong because at the same time we have a value to have Stacks. I'll tell you why. You can just hold STX, okay? Precisely being an STX stacker, therefore blocking your STX and receiving BTC. And that's the big advantage we have over that. That is to say that we don't have to instantiate ourselves in a form of mining to have BTC and passing through Stacks. We can directly touch mining, and it could even be akin to a form if we remove this part of smart contract which is a very strong utilitarian form. We could have participatory mining. We could be akin to a little bit to that on this side, because we will have the capacity to be able to store BTC. And precisely the principle also of the storage that we have information by address, because that was also the complexity. It's how we do to have programmability and how we do to store clean information to each segment, to each person, to each entity, to each decentralized application. For that, they came to create BTC addresses, which are specific to each application and each user. And directly, these BTC addresses will store all the information specific to this user. He will therefore be the only one who can access it. It's very interesting how they've built the thing, whether it's through the cycle itself of links between their building block and the BTC, and on the side, how the structure itself of the miners is done, the way in which they also structured the implementation of their smart contract. So the problem I have with that is that, okay, already there are two things. The BTC maximalists are rather against this layer there, because for them, BTC is not made to be programmable. So we have an effective diversion of what Bitcoin is. Second, the miners themselves really need to be more interesting than BTC, because they're not guaranteed that STX has a better valuation than BTC. So it's a bit as if they were selling BTC and then buying back STX. So on that, we also have a connotation. When are we going to sell BTC to buy STX when we are a miner? That's the big question one might have about that. And so implementing new miners, I think, might be quite complicated. And last point is that the functional block of smart contracts, which is supposed to allow to have here decentralized applications secured by BTC and decentralized finance and NFTs, will be used enough to have new bookstores, simply to have a growing ecosystem. This is the big question that we will have to follow. And that, after all, is the big question we have about all blockchains that are effective infrastructures. That's pretty standard. So we are going to finish in the fundamental part. We are going to attack the technical part where I don't necessarily have everything, because STX is a project that has already existed for some time, but we already have a large part of the graph in which we can clearly see that we have a phase of lethargy which lasted for a certain time before having a first acceleration in 2021. Therefore, first acceleration until March 2021. Classic retracement that we have precisely known, Miminus 2021 with the China ban, second phase of acceleration with a new AT8, which was formed in November 2021, to then have the bear market breakout that we experienced. Above, we have the implementation of a week-off distribution in which we find the BCARST, okay, classic, stop the uptrend, bearish break, retest. We sink to do here the sign of weakness, therefore the week-off accumulation that we will look at afterwards. And there even we had the establishment here of a distribution with a BCRST, so with the UT, the retest and bearish break. All right, so we are really very clean on the wick-off, on the manipulations of wick-off. So on that, it's an advantage. It means that the accumulation in itself worked well, and we'll see it together that that was the case, if I'm not mistaken, of touch. Okay. So here we have an accumulation which is relatively easy to see, in which we have the selling climax, we have the AR, the ST, we have a second AR with an effective retest. We breaks down, we do the ESTB, we do a second accumulation here, in which we do a breakout here with the breakoff structure, bullish reaction, second breakoff structure, second bullish reaction, okay? And here we see that we are in a phase of retesting ABC, which is rather classic on it. And we see that we have retested the 786 already once. We are retesting the 786 a second time, and I think we're going to sink. If we look a little bit at the outlook for this bearish impulse with the real retracement on it, and we're going to look for targets less strong than the ones, and we're going to look, if I'm allowed to hop the potential targets of 618, we see that the 618 corresponds to the 886 of the effective retracement, and which in fact corresponds to the breakout zone, and it is the accumulation, okay? Finally, second accumulation, first accumulation. Of course, so with the STB, and in the STB, we make an accumulation, we make a break. This break there leads us to the bullish movement, something that is classic, so we will retest. It's really not far from what we see with the BTC, in which we are retesting the 25,200. So here we are really in a dynamic where we're going to retest the rupture part of the accumulation. So in which we have a very nice dynamic, which is quite logical. For me, in terms of the buy zone that we could be quite aggressive with a spot zone that could potentially retrace an effective retest to 0.23. Above, we could rework this part there to go buy precisely and expose ourselves if ever we are interested in this project. Project that could have a very strong dynamic with wave 1, wave 2, So we could look for a large wave 3 heliotist, classic. Here we take the bottom with the Fibonacci extension, we take the top and we go to the bottom of the retracement. This gives us here an extension of 1.11 or even a 618, where we see that we have an STX, which would be between a near ATH at $3 and an ATH at $1,618. So the classic extension of a big gliotistic 3 wave with the 5 $3, the 5 $4, which would be a very nice target for an end of bull run, with behind decentralized applications built on it, built on Ethereum, in which we would really have decentralized finance secured by Ethereum. It's a little bit what we expect in any case. Many people are waiting to see whether or not we are able to do that. Are we able to do that at a consistent cost? Because it's the same principle, without precisely impacting and putting Bitcoin at risk. I hope you enjoyed this video. If so, don't forget to leave me a little like and a comment. And if you like this video, I'm sure you'll like it presentation I made of CSPR, Casper's Crypto. The video is from yesterday. I'll put the thumbnail here, and we'll meet tomorrow morning for the daily at 7.